Run it. I can't take no loss. I don't even know what it costs. I hit the ground then it go off. Yeah, hit the ground then it go off. Yeah, I can't take no.
Hi and welcome back to the Conscious Day Trader. I'm Yanis and today we're going to break another pound USD trade on the short side today on the 26th of January. The trade was finished around lunchtime, my Central Eastern Time, Italy time, and we were trading ICT, London Kill Zone, and I'm going to show you everything. I'm going to show you the entry, I'm going to show you the bias of the day, I'm going to show you the execution and how the reasons why I killed the trade early, because today, Thursday, we have some news and we're going to go into that in the afternoon for the US dollar. So before we start, let's jump into the results. And as you can see, if I change that to positions, today we made $522, but after commissions is $499.50. Can we call it 500? Let's call it 500 for 50 cents. What we're going to do next is jump onto our trading view. And I'm going to give you a big tip today that I found out from one of the Scruffy Squad. Big shout out to Trevor, who is a new member. And he taught me everything about Object Tree. I'm absolutely loving it. And as you can see, it's now a very, very clean chart. And just by clicking on there, I can see all my fair values. On there, I can see the liquidity, the orders that I put in, and my daily bias and so on. So we have multiple things that we can show. And we're going to start, as always, on the daily to create our bias. Why was I short on pound dollar today on this huge upside move? And as we can see, if I turn on the liquidity, we've got that range there that is buy side liquidity that the market would want to go and retest and take out the buy stops that people have been shorting this. They would trail the positions there even from higher up. We also got this fair value gap here that is still to be filled. I kind of deleted that. Let's see if I have it in. I think I deleted it for the reason of it was creating a bit messy chart on the daily. So what we're going to do is just put it in now. And this is good practice for you, how to identify this fair value gap here. It will be from this wick of the bottom of the candle. If we put the magnet, that will attach the price to the bottom of the wick. Find the next bottom of the wick, and then you can drag that across. That is your daily fair value gap. And as you can see, we've been tested it once, came back down, tested it twice. And as previously discussed, we've talked about that 125 that I think is going to be the next level. Is it going to be this afternoon with the news on the dollar at 2:30 Central Eastern Time? Be careful if you're trading at that time. There are going to be a lot of volatility and spikes. Or is this going to be taking out liquidity and retracing down? But we still haven't covered the full fair value gap. And as we know, the algorithms like to do that, especially on the lower time frames, but also we see this happening on the daily as well. So let's hide this for a second, and you can hide the object tree on the bottom right side here. And the only thing we haven't added in, just to double check, is the orders. And I purposely doing this to give you an opportunity to see it yourself. And what we'll do is we're going to go back to the daily. And we're going to go into the 15-minute, and we're going to bring the time to the beginning of the session. I woke up really late today, and I woke up around 8 o'clock London time, just because the baby wasn't sleeping. So this is what I saw as we are having the Scruffy catch up in the morning. So this is what I saw, and as we can tell, that fair value gap is covering everything, so we're going to delete it so it makes it easier for you to follow me. So we'll delete that, and then we'll see how the bias is looking. So let's also take away the fair value gaps. And now we have a clean chart. So we have the previous daily high and the previous daily low. If you're wondering how you put that in, you would go onto the daily, drag the previous daily high onto there. and onto there. So, and then for the equilibrium, you would grab that one, the Fibonacci, and drag your equilibrium. You don't have to do the Fibonacci, just as a nice measure of the 50. And the reason we're doing that is because we want to see where the discount price is below equilibrium and the premium price is above equilibrium. So next, what we're going to do is identify if today's candle is going to be a red candle or a green candle. And as you can tell, my work and perception was that it's going to be a down day, especially after I saw this candle on the open of the day. Now that we're on to the 5-minute chart, we can see that the previously daily high broke at 8 o'clock London time during the London kill zone time. This is an super premium price, and the reason is because we're far away from equilibrium and we're taking out buy side liquidity from all these previous highs. If I take the magnet out, these highs are taken out, and also these highs are taken out. Keep going further left. What's left? This has been taken out. Now these three areas have also, we need to check. And this is what I was waiting for, is to see if this is going to be tested. All these, by the way, are buy side liquidity, like this one. And what I was waiting for at least the price to come out and take out the top of these buy side liquidities, which it actually did. So now I was interested to go short. The reason is because I didn't think it's going to go all the way up to my buy side liquidity on the top of this high. It's been rejected. And also to go to the 125, it would have been a move of 700. Let's see if that's right. It would have been a move roughly of 70 pips when we've already done 45 pips. So if that would have been the trade of the day. And also if you think about timing, we're on Thursday. So the move has been on the upper side with a sell-off in the beginning of the week. And now we're going into news. So all these things come together to provide a bias. And yet when you have a bias, obviously if you were biased long, you could have had an entry, because if you see here on the open, we'd had a break of structure here and it came back and filled that fair value gap there. And that would have been a nice 10 pips. And this is, actually it would be really nice 36 pips. So this is a really crucial point, that even if you get your bias wrong and you see a setup and you keep it, you're in and out quick, you can get your profits if you get your direction wrong. Obviously, if you are right on the direction, your profits are bigger and it's safer. So this is what I was looking for. Then as soon as that got hit, I was engaged and looking for a setup. And what do we need to see with ICT to go short? We need to see a break of structure. This is where we go down on the smaller time frames. And this is the candle I was talking about, this huge candle. So I wanted to see a break of structure, creating a swing low, break of structure, fill of fair value gap, and then short it. And that's what happened. Let's see. All right, I'm going to keep going and I'm going to let you guess where I went in. If you're following for a while, you can see it quite clearly where the entry is. So now we have this swing low here taken out by this low. This would be your entry here. However, my entry, if I turn on the order, it's pretty close, but I entered on the previous candle. And the reason is that I saw a mini fair value gap there and I was long. And let me just check this on. I saw that fair value gap there and that was the second fair value. This would have been a safer entry. This is a bit more risky and my stop was above these highs. So we're looking at a risk of 16 pips. And I took out of this trade That's the entry and that's the exit. We took 25 pips. So then I closed the trade. And the reason I closed the trade is because we were coming into this buy side liquidity. And due to the market want to take this buy side liquidity below here, I was quite confident that the price would go there. But being a news day, I was being extra careful with my entries and I wanted to get confirmations. And I was being very quick in and out of the market to get my profits. So this target delivered. Let's see what happened next. Okay, so it's gone back and created a double bottom here, the equal price which was extra confirming that sell side liquidity. And then volume came in, took out the buy side liquidity, and look at that, covered a fair value gap to the pip. Okay, stopped to the pip and then went out. If you see that on the 1 hour, this is what it looks like on the 1 hour. It came down, touched that like magic and went upwards. Let's go back into the trade. And I don't think it broke that fair value bottom of the trade there. And there we go. So this was holding and then it was coming up. Now, why did I enter again? The reason I entered again, one is because at this moment of time, I was $200 up and I needed one more trade. I trade 2 lots of roughly $250 to $300 profit. And I was looking for this to retrace. I was being very patient and I was waiting for a retracement of this fair value gap. So these red candles here, 1, 2, 3, created a fair value gap here. I did enter early onto this and it did go against me up to that point, and I entered my second one. So let's see, that was 10 pips. So $100 in the red, and I took my second entry there. So I haven't put the one because as soon as it came back down, I closed that position. So I only traded that second position. The reason because I already had the profits from the other one, so I didn't need to be greedy. And that went all the way down into that position there. And I believe if we go back to my trade, I got out for 200, so 211. So 1, 2, 3, 8, 4. 1, 2, 3, 8, 4. Let's grab one of these. 1, 2, 3, 8, 4, roughly there. So that was my exit, and 2 reasons I got out. One is because we're getting closer and closer to the time where the news is coming in, and I didn't want to be having any trades going into that. And if we go on back to the 1 minute, we were touched back into that sell side liquidity, and I wasn't convinced that this is going to continue to the low side. We can see now, since I've told you my trades, what has happened. And look at that, everyone is waiting for the news around creating that sell side liquidity. So I'm quite happy that I pretty much killed it at the bottom. I did have a small trade to the upside from here, but I don't want to, because my bias was long, I killed it very quickly. I got entered back into fair value gap here on the way up. I see trades both ways. And the more I'm seeing the price action, this would have worked really well. Entry here when the fair value gap was filled, and that would have been another 20 pips on the upside. But because I'm still new into this area, I'm just doing one directional trades. But if I show you again the results, I did have a $50 buy from 13771. 13771, so that would have been all the way down here, so at the bottom of this here. Soon as I saw that fair value gap being filled, if you want me I can show it to you. So this fair value gap here, I got an excellent fill on really low 117, and I trailed it up for just 5 pips, and I wasn't comfortable with that trade. I thought it was wrong. It wasn't my bias, so I killed it. And I'm happy I did that, and I was patient, and it came all the way back up into my actual fair value gap and traded it down. And that's some key information there. Like, if you're not comfortable with the trade, there's the body's telling you something is wrong about it. Even this would have worked. It might have taught me something wrong that is out of my norm that I would do. And I've uploaded the trades onto the journal. If you do want to take this journal, I love it. It's so easy. You just upload it and it's there. We're very, very close to the 10K milestone, which is going to be a huge. I've never made 10K in my life in a month, so this will be a big milestone for me. And as we said, be careful. Trading is currently 215, so this is very close to the 230 results of the durable goods orders and GTB growth rate. So make sure you either have tight stops or just don't trade it at all and just watch it as a spectator. Make sure you like and subscribe to this channel, because I'm going to make more of these the more you do that. And I hope you've learned something today. Big shout out again to Trevor to opening the world to the objective tree. And I'm actually loving it. It's really cool. You can switch on and off things, and I might actually start putting my Scruffy levels on there, because I can just switch them off very quickly. Talking of Scruffy, if you haven't subscribed to his channel and know who he is, he's one of the reasons I passed the boot camp. So go and share some love to the Scruffy trader. And obviously ICT based. Make sure you check the 2022 mentorship, because that's where I learned how to read fair value gaps. And I'll see you tomorrow for the last trading day of the week. Have a good one.
Run it. I can't take no loss.